Becoming Your Own Banker. This book is so powerful. Just the title. I think we missed that. I think it's easy to miss. Becoming Your Own Banker. You're the banker. You're in charge. You're in control. You have the power to set your payment schedule. That's what's priceless. It's priceless. It's freedom. It brings peace to your life. I'm a happier person now because of IBC. I'm a better person. Not that I'm wealthier, or I am, but that's not the reason. It's because of the peace that I have.
Welcome to the Bankless by Design podcast, where we rethink money, ditch the system, and rediscover what it means to truly thrive well. I'm Tricia Miller, mom of 7, financial coach, and founder of ThriveWell. Around here, we believe wealth is more than numbers. It's about freedom, stewardship, and building a legacy that lasts. If you're ready to challenge the norm and take back control of your financial life, you're in the right place. Welcome back to the Bankless by Design podcast. I'm Tricia Miller, and today we're jumping into part 2 of my conversation with my friend and fellow practitioner, Nolan Johnsrud. Now, if you haven't listened to part 1 yet, pause here and go back to episode 26. Today's conversation builds directly on that one. Now, in this episode, we're going to get real practical. We're going to talk to you about why you shouldn't be afraid to pay a premium, nor should you be afraid to take a policy loan. But I don't want to give it all away. Let me just say, Nolan was amazing, dropping little golden nuggets all along the way. So get ready for what might just be the best episode yet. Without further ado, let's jump back in and enjoy. This is not something that happens quickly. I don't know if we've answered the 100% premium and policy loans, but I do think there's a key here in this very long-term thinking piece.
Absolutely. You definitely have to think long range. Also, Nelson, in the book, several times, he talks about do not be afraid to capitalize. You do have to capitalize your policy. You cannot use your policy until it is capitalized. I tell people all the time, you'll get out of it exactly what you put into it. The more you put in, the more you can take out. So that's really what we're getting at here, or that's really what Nelson was getting at here. The reason he had to revise his spending pattern is he realized I need to pay more premium so that I can take more policy loans, so that I can pay off the bankers, snakes and dragons, as he called them. But the reason he wanted to do that is for the control.
Right.
A loan is a loan. I don't care if it's a policy loan or if it's a loan from a third party bank, it's still a loan. And yes, it still does have to get repaid with interest. The difference between a policy loan and a loan from a third-party bank is you have control of the policy loan. You can choose the repayment schedule. You can choose to pay interest only for as long as is necessary. And that control is priceless. It really, truly is priceless.
Right. You control the terms. And let me just add a clarifying point. You just said you can choose to pay the interest only. You don't have to even pay the interest.
Correct.
But we advise that you do so that you don't pay interest on interest. You can't pay any payments at all. Do your best to pay at least the interest so that does not compound.
Exactly. I was just going to say compounding interest is a wonderful, great thing. However, you don't want interest to compound against you. You want it compounds for you. So that might be a little bit of a mind shift for a lot of people. You want me to pay all this premium, but then when I take a policy loan, I have to pay interest to the insurance company. Yes, you do. Like you say, you can choose when to pay it. You can keep up monthly interest payments, or you can just, whatever your cash flow is like. But that's something you do have to watch, that the interest is due, and you don't want to not pay the interest on your loan and have that interest just get added to the loan. Now you're going to have a bigger interest bill the next year, and that can get out of control on you, and you can get yourself into a little bit of trouble there. So I do recommend at least paying the interest. But when you think about that for a second, I've had this conversation many times with people, and I relate to this because I'm this way. When I do take a policy loan, I just have, there's just something inside of me that I'm like, oh, I got to get that thing paid off. I want to, I feel better when I don't have policy loans. It's just a natural thing. So whenever I do take a policy loan, all of a sudden I just feel myself kind of like, how can I get this thing paid off as fast as possible? Because I don't want this loan. And so now we're looking at, all my income is supposed to be going to premium. So now when I take a policy loan, how am I supposed to pay that back? Well, wouldn't it be better for your cash flow if instead of buying that new vehicle that I bought yesterday, instead of paying for that in cash, I had the cash to pay for it, by the way. But you know what I did? I took my cash and I paid premium, and I took a policy loan and I bought that vehicle. And this is why.
There you go. That's revising your spending pattern right there.
Completely revising it. But this is why I did it. It is better for my cash flow to pay, even if I pay interest only on that policy loan. I'm paying, let's say the vehicle costs $50,000. It costs more than that actually, but it's better. My cash flow is going to be way better if I pay interest on $50,000 versus paying the $50,000 and never getting a penny of that back again. So that was
explain that for our listeners just a little bit.
Okay. We've all heard the term cash is king, and I get that. It makes a lot of sense. I used to really think that too, but cash is actually queen. Cash flow is king. You can have all the cash in the world, or you can have all the assets in the world, but if you can't access that value, that money, it's not really doing that much good. So if you pay for something in cash, that's all fine and dandy. That's great. But that cash is gone from your cash flow forever. That $50,000 that I spent on that car is gone. I will never earn another penny of interest on that $50,000. I won't earn. That's opportunity cost, the future earnings on that money. So I will become wealthier over time if I take a policy loan and pay interest on the $50,000 than I will if I give up that $50,000 to pay cash for that car.
Right. Because you took the $50,000 cash, you put it in your policy as premium. Now those dollars will continue to grow for the rest of your life. Uninterrupted, compounding, growing tax-free, able to be passed to your heirs tax-free one day. But the idea being that it will never stop growing. So you have that 50,000 growing on this side while you now have a policy loan over here that you're paying down over time, but this continues to grow.
Exactly. It continues to grow. It continues to compound. When you look at a compound growth curve, it starts out real flat and then all of a sudden it takes off.
Right.
And that's what you hear people call it the magic of compounding. I don't like to use the word magic. I don't really believe in magic, but it's kind of this a hockey stick curve. But in my mind, I think of it, it's a snowball effect. I come from the north. It's cold up there right now. It's wintertime. We have a lot of snow. So when you think about, you start out making this little snowball and then you start rolling it in the snow and it slowly gets bigger and bigger. And eventually that thing you're rolling it and it's kind of hard to roll, but all of a sudden it starts gaining momentum and all of a sudden it's kind of rolling on its own. And the bigger it gets, the faster it rolls. That's compound interest. And that's the magic of compounding. And that's the beauty of taking a policy loan and paying your cash into premium is you're starting this snowball and it's the snowball effect. All of a sudden, you're going to slowly build this big snowball that will just take off by itself and just take off rolling and continue to grow and get bigger and bigger. That's the magic, the beauty of the power of compounding.
I love that analogy. Let me ask you just from a practical standpoint. So you take this policy loan to buy this vehicle. Did you set yourself an amortization schedule to pay yourself back with? How are you thinking about paying that policy loan back? And do you do it with additional interest like Nelson taught us? Or
I absolutely run an amortization schedule simply, just for my own, just for some accountability to myself, some discipline. We're all humans. It's so easy to be undisciplined, right? It's natural to be undisciplined. In order to be disciplined, you have to make a conscious effort to be disciplined. You have to discipline yourself, just like you have to discipline your kids because they're not going to do it for themselves. And you discipline your children because you love them, right? So if you love yourself, you will also discipline yourself. And so I'll definitely print an amortization schedule. Now, that being said, I'm also going to be kind to myself, and I'm going to allow that repayment schedule to be flexible. I'm certainly going to make that monthly or annual payment, however you've set it up. I'm going to have that spreadsheet. I'm going to post it somewhere where I can look at it often, but I'm just going to keep track of my payments. And I might make a payment every month. I might not. I might skip a month here or there, or, it just depends on your cash flow. I'm in the insurance business. It's commission income. My income varies from month to month. That can be a very scary situation. But the beauty of the infinite banking concept is it really brings a lot of peace back to your life, knowing that I have access to this capital for those months when the income was a little bit lower, or maybe a lot lower than I would like it to be. That happens.
So you can give yourself a month off, and then when you get a greater income than you expected 2 months down the road, you can make 2 or 3 times the payment.
Becoming your own banker. This book is so powerful. Just the title. I think we missed that. I think it's easy to miss. Becoming your own banker. You're the banker. You're in charge. You're in control. You have the power to set your payment schedule. That's what's priceless. It's priceless. It's freedom. It brings peace to your life. I'm a happier person now because of IBC. I'm a better person. Not that I'm wealthier, or I am, but that's not the reason. It's because of the peace that I have.
Absolutely. So much flexibility. And it's interesting. The more I study this, the more you realize. I saw a post just the other day from Robert Kiyosaki about stuff going on with the Federal Reserve, the central banking system in our government, and how they're fighting over control of the interest rates, right? The government wants it to come down. The Federal Reserve does not, whatever. But he kept talking about how they're fighting over control of those cash flows. And I could not help but think, this is what we're not taught. Control is so important. We have to learn to think like bankers. They want control. We should want control.
Well, that's a great point. When you said, we have to think like bankers. Okay, I worked in the banking business. I was the loan officer. I made loans. And here's the funny thing about thinking like a banker. We go to the bank, we borrow this money, we have this monthly payment, or, we have this payment schedule. And my job as a loan officer, if somebody was late on a payment, I had to call them and be like, hey, what's going on? How are you going to make this payment? My job was to manage the repayment of this loan. And so it's easy to think that, the bank, they want you to repay this loan. Actually, banks don't really want you to pay the loan off. Think about that. How does a bank make its money? It makes its money from interest, by earning interest.
Constant cash.
So if they don't have loans outstanding, they don't have any interest income coming in. Banks, all they really want is the interest payment. Now they're not going to tell you that, because they want a performing loan.
Sure.
In the business, we talk a lot about, is a loan performing or not? And by performing, we mean, are the payments being made as scheduled? But that doesn't mean a bank, once a loan is paid off, they really want you or somebody else to take another loan, because they need those loans outstanding at all times. They just need that interest coming in at all times as well.
If you get to the point in your mortgage of 10 years in, the bank is calling you, your phone is ringing off the hook. Don't you want to refinance? Because they
would love to refinance
that amortization schedule to get those bigger interest payments coming back in again for another 30 years.
Exactly.
That's so important. So yes, this is why when Nelson talks about taking policy loans, he says our brains freeze, because we all think loans bad. Loans are negative. We don't want to, and it is true. Like you said, we are exchanging a loan with, a third party bank, bringing it under our own policy loan it's still a loan, but now it's a loan that we own and control. And now we have to put our banker's hat on and think like banks and think, well, now I have a loan. Now I need it to be a good performing loan. So I have to be an honest banker, because I am now the borrower and the banker. So I surely want my borrower to be a good borrower who's actually faithful to pay those loans back, right? So that I have a good banking business. But I can look at those loans differently because they're also creating cash flow back to myself. So now that you have taken out this policy loan for this vehicle and you are paying yourself back, you've created for yourself a cash flow coming back to you, and you get to use those dollars again, even as that money was put in as premium and is growing. So this just becomes like, the more you think about it, the more you're like, it's too good to be true.
Exactly.
It's unbelievable, the benefits.
People say that to me sometimes. This sounds too good to be true. And, as practitioners, I think we do have to be careful. Nelson said, don't sensationalize this.
Right.
It is easy to throw up on people and tell them all these things you can do. There are all these things you can do with an IBC style policy, but you also have to have discipline. You have to be an honest banker. You have to do the right thing at all times. Do have to pay those loans back eventually as it works for you. That's the key right there. I'm the type, just the way I grew up, I'm very conservative. So yeah, I would see these policy loans. And that was kind of how our conversation started, Tricia, is I was just grappling with this, to the point where I was afraid to take policy loans. And our conversation it clicked something in my brain. Like, okay, it's so simple to me now, but I really wrestled with it in my brain. Yes, you have to pay the loans back, but you might take the rest of your life to do that. And that's okay. That's not necessarily a bad thing. So you do have to pay the loans back, but that's why I say be kind to yourself and don't feel like you have to pay the loans back tomorrow. Right. You've got time to do that. Now, that being said, this 100% of income going to premium thing. Okay. That whole question that, I've been thinking about that a lot too. And here's something that dawned on me is when we think about paying premium and the effect that's going to have, and then we talk about thinking long range, right? We only have our lifetime to pay premium into a policy, right? But once that policy is in force, the benefits of that policy are going to affect multiple future generations. Right. It's going to affect our children, our children's children. Financially, it's going to help them financially. The death benefit of my policy, actually, I don't have any children, but I have nieces and nephews. So same thing. It's going to benefit the next generation. But I can't pay premium after I've graduated. I have to pay the premium now. So I was like, that helps me understand the 100% of income going to premium thing, because I need to pay the premium now, not later. As you can, for as long as you can. Exactly. And I do love that you brought up this generational thing, because we do tend to look at it as just, even if we're thinking long range, we think we're thinking long range when we're thinking about our life, and then not remembering that, no, this can multiply 2 and 3 and 4 generations down the road. So if we have that in mind, then how much more do we want to go ahead and pay that premium? And we also had talked about the fact that even with outstanding policy loans and interest and all of that, we forget sometimes too that the likelihood is that we have more earning years in front of us. And even when we don't, even when we're done working and having, a regular income coming in, we now have a policy that has been started for some time. So it has gained momentum, and it is often paying dividends and interest that is multiplying that premium depending on when you started this thing. I mean, I've seen it as little as 2 times your premium for somebody who started later in life, but I've also seen it 7, 10, 12 times. And so that makes up for a lot of mistakes. It's going to make up for a lot of policy loan interest even, or, outstanding debts that you might have, because at the end of the day, what is the sure way to pay off a policy loan? When you pass away, it wipes it out. And there you go, right? The beauty of it is the worst case scenario is that your death benefit pays off the policy loan. That's actually the worst thing that can happen. And that's not that bad of a deal.
No, because your death benefit, as long as you didn't let that interest compound on interest, is still going to.
Then even if you did a little bit, worst case scenario, it's a net sum zero.
I almost think you have to work really hard to.
You would have to work at it.
Yes.
You would have to work at it a little bit. But yeah, once you really understand how a dividend paying whole life insurance policy works, I didn't understand that for a long time. Even after I bought the policy, didn't fully understand the mechanics of life insurance policy. But once you really understand that, your death benefit is constantly increasing. That's why your cash value constantly increases, because cash value chases death benefit. Cash value has to equal the death benefit at age 121. So you would almost have to make a fairly significant effort to have your policy loan equal the death benefit. I mean, you'd have to actually work at that. You really would.
Especially if you have a well-designed policy.
A properly designed policy, let's put it that way.
Let's add that factor.
That's a great point. Policy design, there's a lot of stuff out there about that.
A decent base foundation. But yeah.
And that's really a topic for another day. But point being, I guess the moral of this story that we're trying to tell here is don't be afraid to capitalize, but also don't be afraid to take a policy loan.
Right.
I had to learn. That was hard for me to learn. I've had a policy since, I feel silly, but I've had a policy since 2016. I've had two policies, a policy on me and a policy on my wife. And I've definitely taken some policy loans over the years, but then it was just like this race to pay those policy loans back. And now I look back and I'm like, what in the world was I thinking? What was I smoking? Why was I so bent on getting those policy loans paid back? I should have been buying more new policies. Because that's another thing I think about that I don't think most people, I guess I didn't, and I don't think most people do. When you think about an insurance contract, especially a dividend paying whole life insurance contract, that's an asset. You're not just buying it. It's not a homeowner policy. It's an insurance policy. Your house is kind of an asset, but I call it a non-performing asset because I'm constantly fixing things. It costs money. You have to pay taxes. The refrigerator quit working. You're constantly, there's upkeep on the house. But okay, your auto insurance, you buy auto insurance, your vehicle is constantly depreciating. It's not a very good asset. That's a depreciating asset. A life insurance contract, it's an asset. So when you're paying premium, you're buying an appreciating asset. Real estate is a pretty good asset because it tends to appreciate. However, I cannot think of a better asset to buy than a dividend paying whole life insurance. Actually, than a whole life insurance contract, any whole life insurance contract. But a dividend paying one is just that much better. It just really hit home for me in our conversation. If I can guarantee, hey, Tricia, if I can guarantee you that this asset, you can buy this asset and everything you put into it, you or your beneficiary will get back 100% of the value plus some, would you hesitate to do that? Why are we hesitating? Why was I hesitating? Why was I so focused on repaying that policy loan when I could have bought another policy? I don't know.
Convincing me that I need to convert one of my term policies quicker. But you're right.
Yeah. It's going to be, everybody's policy is a little bit different. Everybody's situation is a little bit, everybody's cash flow is a little bit different, and everybody's goals and dreams are a little bit different, so it really is a case by case basis. However, I guess what I really want to convey right now is don't be afraid to pay premium. Don't be afraid to purchase a policy. If you're on the fence, if you're thinking about it, trust me, you won't regret it. And I don't care, some people say, oh, I need to wait until I have a whole bunch of money to buy a policy. No. Time is the most valuable thing about a life insurance contract. The sooner you start, the bigger that snowball is going to be. And so start where you're at. You can buy more than one policy. Nelson had 40, 78. Yeah, I forget. Yeah, a lot. I think that's another misconception out there. that, people that just aren't in the business wouldn't really think of it. But you can buy multiple policies on yourself, on people that you have an insurable interest in. So the most important thing is that you start.
Get started. Absolutely. Best time to plant a tree.
Yeah.
20 years ago. Next best time? Today.
Exactly.
Because absolutely.
I think all of us that are seasoned in the infinite banking concept, we're all, kicking ourselves. Why didn't I learn about this 20 years ago?
Yeah. But
why didn't I buy a policy 20 years ago? I don't know, but you didn't. But
you did.
Guess what? Don't let 20 more years pass.
That's right.
Get started today.
And I see that a lot. Just get started. You still have life in front of you. Are you still going to be doing financing? You're going to still need money flowing through your hands 5, 10, 20 years from now? Of course you are. As long as that's the case.
Exactly.
Keep going. All right. Gosh, this was a great conversation. Thank you so much, Nolan. I've really appreciated it. I did want to make sure people know where they can find you. Give me a little bit of information about where they can find you online.
Yeah. So I'm old fashioned. I'm not big on social media yet. I'm working on that. But my website, nolanjohnsrudinsurance.com, is the best place to find me. And my contact information is on there. My phone number is on there. I love to talk to people. It's my favorite thing to do in the world. So I'm available anytime, all the time. Call me, email me, text me. I am on Facebook. You can stalk my Facebook account if you want. Okay. But I'm out there, and I just enjoy sharing this concept with people. And so I don't care who you are, how much you know, don't know. I don't care if you want to call me to bash the concept. I will talk to you about it because it's just my favorite thing to do in the world. If you want to argue something, go ahead. I'll listen.
Nolan, what I appreciate about you is I know you're a man of integrity, honesty, and just wide open book. And goodness knows, I've really, really appreciated your friendship and your encouragement along the way as well. And let me just ask you a couple other things before we go completely. Do you have a favorite book or a book that you would recommend maybe besides becoming your own banker?
Yes, I do. Okay, this is the most important book. Read this one multiple times. But How Privatized Banking Actually Works by Carlos Lara. I think I've got, okay, great. I don't have it right here. How Privatized Banking Really Works. I think that's the title of it.
I agree.
Excellent book. Everyone should read that book. I learned so much. That's such an amazing piece of work there. Everyone can benefit from reading that book. Also, The Creature from Jekyll Island. I know it sounds like some kind of scary movie, but just very interesting, very educational book.
Absolutely. Well,
everyone can benefit
your
from.
eyes to the system that we're in and why we're all falling behind.
It will help. It helps things make sense. I think oftentimes people are just like, man, I'm working harder than I ever, and I'm just not getting ahead, and I just don't understand why, but I don't really have time to think about it, So I know we live in a world today where people don't think that they have time to read. I like to read. I love to read, but it's worth taking the time to read some of these books because it just helps everything make sense. And once things start making sense, it brings more peace to your life. It's worth your time.
And when you know what's happening, you know what to do. I would just encourage people, especially if they feel like they don't have time to read. A lot of times people that don't have time to read have a long commute. There's a thing called Audible.
Audible is wonderful.
I mean, I like personally having paper and pen, and I write all in my books and take notes and underline and highlight way too much. I have also taken advantage of something like Audible sometimes just because I want to get another book in quickly. And that's,
this book is on Audible. But here's the thing. I tell people all the time, whenever we have to start here, I can give you some nuggets, but you're going to have to read this book at some point. You're going to want to read this book at some point. Now, this book it's also on Audible. So a lot of people are, okay, I'll just do that. What I found is you don't just read this book, you absorb it. And I think it's easier to do with the physical paper copy. It's very deep in knowledge. It's short. It's only 93 pages, and most of them aren't even full of words. There's blank spaces on the pages. But Nelson kind of writes in parables. So you have to kind of like stop. You have to read a paragraph or a page, and then you kind of have to stop and think about it for a second. And the trouble with Audible is, it just kind of keeps going
too quickly.
I felt that way about all the books that I listen to on Audible. I have to listen to them more than once because you miss some things and you're driving and maybe you're distracted. And we don't want distracted driving. I'm a professional insurance agent and no distracted driving allowed.
Yeah, I would agree. I would caveat that. Like, if I'm going to listen to any books on Audible, it's not going to be Becoming Your Own Banker. I might listen to some of the other ones. I might listen to Creature of Jekyll Island. And even then, I'm with you. Sometimes Audible is a way for me to screen what book I really want to dig into and with paper.
That's a good point. It's a way to maybe test out if you really want to invest the time to read it. That's an excellent point. Yeah.
But
yeah, I'm not saying don't listen to Becoming Your Own Banker on Audible, but I'm just saying you're going to want to physically read it also.
Absolutely. And if anybody's interested, I have a recommended reading schedule that I'm happy to give out where we can kind of condense down and even give you a way to read Becoming Your Own Banker in such a way that it kind of helps you really grasp the material maybe a little bit more efficiently. So if you're interested in that, you can reach out to me at Tricia@banklessbydesign.com for that. Anything else you wanted to add before we go? We've been on here a little over an hour now, so this has been great. So I love it.
Time flies when you're having fun. This has been fun. Like I said at the beginning, I'm honored to be here. Tricia, you're right. You and I have become friends because of the infinite banking concept. Iron sharpens iron.
Yes.
We've had a lot of conversations. This one that we've been talking about here was a text. We just started texting back and forth. I don't know why. I just had this question. I threw it out there, and all of a sudden, we had quite a lengthy text conversation we had. When I think back, we've had many conversations, sometimes on the phone, sometimes we've been in person, but it's been such a wonderful journey because you have pushed me, and I think I've pushed you to understand the concept better. A lot of times, like, we just get to wrestling with something in our minds, and we've just been able to help each other work through that. And nobody can do this alone. No. You cannot. So that's what we're here for. That's why we're authorized practitioners. Our job is to coach you through this because you can't do it alone. You can't. So it doesn't have to be me. It doesn't have to be Tricia, but you do need an authorized IBC practitioner. You do. So find one of those. Tricia, you're one of the best authorized practitioners that I know. And so I appreciate your friendship. I appreciate you sharing your knowledge with me and answering so many questions for me. And I just look forward to doing more of this in the future.
Thank you so much. And yes, I just want to reiterate that you've got to be in community with people. And I know you and I both have said in our own experiences that you start this and then you get busy about your life and you've gotten out of the IBC bubble and you forget and your mind falls back to old patterns and you need someone else there along with you going on this journey with you. So we invite you to that, whether you want to work with Nolan or you want to work with me. Either way, you want a really great horseman, we call you that, or a cowboy to work with. Nolan's your guy. One of these days, I want to come visit you and learn to ride.
I do have the horse disease. It's a disease for which there is no cure.
And you're excellent at it, even award-winning.
I've had some success. Yeah, I've won a few trophies. It's been fun. It's a great experience. However, thank goodness for the infinite banking concept. It's really helped me finance my horse disease.
That's an expensive hobby, isn't it?
It can be, yes.
And I look forward to seeing you soon in person at the think tank. So forward to that in early February. But I think we'll go ahead and sign off now. I think this is a good place to end. Thank you so much for being with me, Nolan. And thank you so much for listening. I hope you've enjoyed this episode and we'll be back again next week. Take care. Have a great week. Thanks for tuning in to the Bankless by Design podcast, where we're done with the system and we're doing money differently. Be sure to subscribe, share this episode with someone who needs it, and visit us at banklessbydesign.com to learn how you can start living Bankless by Design.